All right, what's up, guys? Welcome into the now 2020 weekly live show, back in action, Tuesdays, 5 p.m. Pacific time. It's been a hot minute since I've been on here live with you guys. It's been about 9 weeks. I took a little YouTube hiatus. I have not been doing much Instagram for like a month. It's been phenomenal for me and my mental health. I hit Q4 burnout. That's a whole nother video I already have recorded. I'm going to be editing and uploading for you guys. How to avoid burnout, what to do if you do hit it. Because that's what happened for me during Q4. So this show is all about taxes, though, which I'm super excited about. I want to introduce you guys, Mark, Not Your Dad's CPA. He has also been on this show one time a year ago, as well as all over the interwebs as far as Instagram and Facebook groups and all that fun stuff. So Mark, you want to give a little intro about yourself, what you do as a CPA, specialize in e-commerce, all that good stuff?
Yeah, speaking about phenomenal taxes, right? So I am a CPA. I specialize in e-commerce. Mainly I work with resellers. You know, most of my clients sell on eBay, Amazon, Poshmark, Etsy, you know, any platform. And yeah, I have a small Amazon FBA business on the side. So something I enjoy not doing, you know, because I only do it like an hour or two a month, which is awesome. And yeah, just happy to be here, answer questions, and help out.
Awesome. Well, thanks for being here. First and foremost, thank you to everybody for your patience. As far as my hiatus, I saw Kyle said he's alive. Yes, I am still alive. I am doing very well. I am over my Q4 burnout. I was also down sick for 10 days. That was miserable. And Trista kept, of course, making fun of me for the man sickness until she got it. And she apologized for that, the man sickness comment, because whatever's going around, I don't know if it's just on the West Coast here, but there's something going around that is a little bit stronger than normal. Head colds and body chills and all this stuff. And I had some type of bronchitis. It wasn't quite strep throat, but it was pretty bad. So I was on a liquid diet for 3 days. Like it was miserable, but at the same time, I think it was the universe's way of forcing me to take some time off, which I struggle with. I tend to work with no breaks every day. I will literally just go 8 to 10 hours straight, no breaks. I don't eat much during the day until I get home at night. It's just been a whirlwind of a Q4, guys. So I'm excited to be back in normal schedule, start getting some more guest speakers on here, dive into the tax scenario. We filtered down like the top 10 questions that a lot of people are asking about taxes. I did a poll inside of a couple of our Facebook groups. I did a poll inside of our Instagram account, all that fun stuff. So we're going to get on here, break down reselling 101 and taxes for you guys, explain how it all works. Of course, this is open Q&A. It's a live show right now. So if you guys have questions for Mark, he's all yours for the next hour, completely free. So take advantage of the free consult, if you will. So I guess we'll just dive right into it. I mean, I have a list here, so I'm just going to go down the list. These are in no specific order. And of course, we'll find rabbit trails and topics and all that stuff to go off of. So number one is, this is what I did and why I came crawling to Mark for help. So this is a question I got, but I also relate to it because it's what I did. I did not do any type of accounting and spreadsheets and all this kind of stuff we were supposed to do until the end of the year. And then I had to go and backtrack my entire year as far as cost of goods sold and all this stuff. So Mark, if somebody like myself who came struggling doing any type of accounting, how do we begin to backtrack for the entire year to make up for that? And how do we get ourselves set up for the next year?
Backtrack, yeah. Well, I just want to say first, man flu. Yeah, well, I just want to say man flu is a scientifically documented fact. You know, when you get sick, like it hits you hard.
Oh man.
Anyway, I thought it was funny. You texted me and you're like, "Oh yeah, I'm so sick." I was like, "Oh man, I'm sorry." Yeah,
it was brutal. Did you get sick yet? Are you good this year?
I didn't. I had something that lingered. I was having just some cold that would not kick, but I'm pretty much good now.
All right, that's
good.
But
as far as the question, so you haven't done a great job of keeping records or whatever throughout the year. and now it's tax time. So, what do you do? So there's two parts to that question. Like, one is, well, what do we do for the past year, and what do we do going forward? Obviously, the opportunity is, to do it right going forward. But as far as the prior year, you just have to do your best at putting together a picture of the prior year activity. So your prior year activity, that includes your sales, your cost of goods sold, your different expenses. And to get those, you just have to use the resources that you have. So if you're selling on a platform like Amazon or eBay, you can get your sales and your platform expenses usually from a report. You run a summary report for the year for Amazon, or same thing on PayPal for eBay, and that'll give you your sales. So you have the first piece to the puzzle. Then you got to go to the next one. Okay, what was your cost of goods sold? And that's basically your inventory deduction. And that one will depend on how you're deducting inventory, which is something we'll get into later. But you can get those costs from bank statements or credit cards, or maybe you have receipts, maybe you have a logbook, maybe it's a combination of that stuff. I mean, it might not be perfect. And the thing is, you don't want to freak out if you don't have everything. Like, honestly, if you can get it to be 80% or 90% accurate, and that's the best you can do, then that's the best you can do. Like, the IRS isn't going to come knocking down your door. But that's kind of the process. Same thing. Go to your credit card statements for your office supplies, software, stuff like that. If you have your personal and your business activity mixed in the same bank account, what I like to do is, make sure you separate those going forward. But then, for the prior year, I would export all that stuff into a spreadsheet and then just go through and tag everything that's for the business, and then just sort it out, so you can kind of isolate that stuff. So just don't get overwhelmed, and just take it piece by piece and try and get it, 90% accurate.
I'm a living testimony of this, guys. You don't have to be perfect. You just have to get something together. And it really, when you have to go through and backtrack too, so like I've got tons of video content I'm going to make about 2019. And this was one of the topics I want to dive into in a separate video too, is just our own journey with the tax scenario that we've had to go through and all the mistakes that we made. When you have to go through and backtrack, and I'm curious too, comment below if anyone else has had to do this, where you have to backtrack for an entire year, even 6 months or a quarter, and deduct, how much did I buy this stuff for, and make spreadsheets and use GoDaddy bookkeeping is what we've used, and then switching over to QuickBooks. So if you've had to do something like that, it forces you to sit down and get your stuff together so you don't have to do that again. So when you can just start setting time, like what we do now is we sit down, typically on Mondays is like my accounting day now. And so I'll sit down every Monday, look at the prior week, make sure everything on my GoDaddy bookkeeping is categorized how it should be, so that I'm not letting it just stockpile till the end of the year or halfway through the year and then freak out because I have to do all this work. So yeah, don't make that mistake if you're just starting, you're brand new, because we have a lot of newcomers here. If you are starting brand new, get your accounting right out of the gate. Just start making it a habit to sit down every day or once a week, to really keep that stuff in track, because it's going to save you a ton of time and headache later on. And so once you go through the backtracking, figuring that stuff out, that's kind of, like you said, part one. Part two is, this kind of ties in with another topic that we had jotted down. It was a highly requested one, which is, what's the best way? And of course, this is a lot of just personal preference stuff, but could you give a couple different ways to track all of this as far as the accounting side? Because obviously that gets into more like the cash versus accrual, and you can talk about the differences and kind of the best way to track as far as different scenarios.
Yeah, like the main frustrating thing about, if there is a frustrating thing about these questions for me, is that I have to answer them, especially when I'm talking to a large audience. Like, the answer is always going to be, it depends. And then I have to go into the different scenarios. So like, it depends what platform you sell on. It depends on how complex your business is. It might depend on where you are located geographically. So, from a high level, the best way to track everything, the first thing you want to do is is make sure that you're separating your business activity from your personal activity. And the easiest way to do that is by getting a separate bank account. So if you're a sole proprietor, that bank account can be a separate personal account. Like, it doesn't matter because there's no legal separation between you and your business. But if you have an LLC or an S Corp or something like that, you want to make sure that you have a separate business bank account. And then what you want to do is just link that bank account to some type of bookkeeping software, or you don't even necessarily need bookkeeping software. You could just use a spreadsheet to keep track of your different transactions. And that's where it depends on like how much volume your business is doing. Like if you have a ton of transactions, you're not going to want to track all that stuff manually in a spreadsheet. Whereas if you have like a small Etsy shop with a few transactions a month, then maybe a spreadsheet is sufficient for you. It depends on your comfort level with spreadsheets or with, bookkeeping programs. A program like QuickBooks is one of the biggest out there, QuickBooks Online, but a lot of people get in there and they find that it's a lot more, or maybe a little more overwhelming than they feel like they can deal with. A simpler program would be like QuickBooks Self-Employed or GoDaddy Bookkeeping. I mean, it just depends. People like GoDaddy Bookkeeping because it integrates nicely with Amazon. But it's also limited because it doesn't have balance sheet capabilities, meaning it doesn't show you assets and liabilities, which is something QuickBooks Online can do. So, I mean, I'm just kind of rambling, but backing up a little bit, like I find that most resellers find that having some type of bookkeeping software, whether that be GoDaddy Bookkeeping, QuickBooks Online, or Xero, or Wave Accounting, and a spreadsheet to keep track of their inventory detail, using those two things in combination, I find is a good way for someone who's starting out to get started. So
as you guys can see, there's a lot of different options. And a lot of the times, like, I was part of that case where when I first started, I kept hearing QuickBooks. So I downloaded QuickBooks, got into it, and it was just so overwhelming. It was so complex. There's a lot of different things you can do with it. I didn't need it back then. So I just went with GoDaddy Bookkeeping. It was very simple. And QuickBooks does this too, but once you tell it, a transaction from, let's say, I go to Lowe's for my boxes. So anytime I don't go to Lowe's for anything else. So anytime I see or GoDaddy sees a Lowe's transaction, it automatically knows that goes to supplies as a category. And you tell it this one time, and you can tell it to auto categorize that for you. So it's very simple to do this stuff once you initially set it up. And now we're in a position where we have a lot more streams of income. We have different stuff that we're doing all the time, a lot more transactionals going on every single week. So now we're upgrading to QuickBooks because we need that complexity a little bit more now. But like Mark said, keep it simple, especially in the beginning. A lot of you guys are new. And when I say new, I mean within the first year, you're still trying to figure out all this stuff. Keep it as simple as possible. If you just want to do a normal spreadsheet for yourself and manually just update it every day or every week, totally go for it if it works for you. But when it gets to be a time suck, that's when a program or a service can help you. And it's totally up to you which one you want to go and do. And I tell people trial and error. Most programs like QuickBooks or GoDaddy Bookkeeping will have some type of free trial. So you can try them both out. See, a lot of times they may do the exact same thing, but it's just you like the physical or the visual layout of one better than the other. That's just the human part of us, right? We choose stuff a lot of times based on visual looks. There's programs that I know are great, but I don't use because I visually like something else better. That's just something.
That's why they watch you.
Yeah, exactly. Yeah, it's so funny how that works sometimes. Like the human brain just, I don't know. It cracks me up to look at stuff like that. So a lot of these questions we're getting in the chat too, and we'll make sure we hit all these for you guys too. So don't think we're ignoring you. A lot of these questions I'm seeing ties into the cash versus accrual accounting base. And Mark can cover each of those for you. And I saw one question in here is, let me scroll up real quick, make sure I didn't get this. What is it then? My head is spinning over tax requirements. We're going to cover all the basics for you guys. Don't worry. Our goal here for this next, 40-ish minutes for you guys is so that you can leave and have a better understanding of whatever it is you're confused about. And again, we'll, give some more info on this stuff towards the end on how you can better understand it all. Basically, especially with using an accrual base system, tracking individual sales, cost of goods, deducting it, unsold inventory at the end of the year. Could you dive a little bit more specifically about the difference between those two?
Yeah, with in the beginning.
I like what
So
Crimson sent down here. Hire a CPA. Yes. That will solve a lot of your questions. Is just hire CPA. There's so much I don't know, but that's what we pay this guy for. So he can deal with the headache portion I don't want to.
Yeah, and unfortunately, that won't always solve all your problems, because I talk to people, every week who are telling me about how they had to explain all this stuff to their CPAs who didn't really get it. So that's why they were talking to me, so it also depends on what they specialize in. So, okay. So cash versus accrual. So most small businesses are cash basis overall, meaning that when you receive cash, it's counted as income, and when you spend cash, it's counted as an expense or deduction. But then, when you drill down into inventory, even though your business overall is cash basis, historically for retailers, inventory, the requirement has been to treat that using the accrual method, meaning that you don't deduct it when you actually spend the cash on the inventory. You incur that deduction when you sell that inventory. So you don't deduct it when you buy it, you deduct it when you sell it. So that's historically been the requirement, even though everybody's been confused about it and everybody's been fighting in forums about it for, the last several years. But, in general, that's a good way to do it, because it matches up your expenses with your sales. It gives you a better view of your profitability. So with the Tax Cuts and Jobs Act, all the tax changes in late 2017, so that changed this a little bit, because it gave us the option to actually use the cash method for inventory, meaning the option to deduct inventory when we purchase it. So I think that was an unintended consequence of the legislation, which is why I don't really recommend that people do it. And also it throws off your profitability. Like if you go out and purchase $10,000 worth of inventory, you might show a huge loss, but did you really have a loss? Not really. You just bought, you're eventually going to convert into cash. So that's it in a nutshell. I mean, hopefully that is a quick introduction of that. So there you go.
Absolutely.
I don't want to go into that more unless I have to.
Yeah, it's a very in-depth. There's like tiers to it. And if you guys have questions about, so I see a couple of comments in here, like it can be very, very confusing, especially if you've never dealt with anything tax. I was in the exact same boat, guys. A couple of years ago, I had no idea what any of this meant. Even after it was explained to me and I started following Mark, there was stuff Mark was saying 2 years ago on Instagram where I was like, okay, I still have no idea, but now I get it, because obviously I've got more experience. I've gone through some of the steps myself now. But if you guys want more in depth, so we're talking a lot of, a little bit of each topic here, so we can just get this, out there in the public. But if you guys want more in depth, Mark just launched his updated course, which was available last year. Now it's available again. The link is already in the description below. I'll put it in the chat as well. And it's heavily discounted right now for this first week, 72 hours, if I remember right.
I mean, if you're watching this now, the next 48 hours are at a substantial, never to be, had again discount. And then for the week after that, it'll still be discounted. And then after that, it'll be at its full price, but I think we're going to put a discount code linked below.
Absolutely. So if you guys are in that phase where it's like, I need to understand the tax stuff a little bit better, I need to understand the accounting just on a day-to-day basis, I highly recommend that. I'm not even saying this because we get an affiliate, obviously, a commission kickback for every sale. We're always transparent with you guys about that. I don't even care about the kickback. It's if I were, 2 years ago, because Mark didn't have this 2 years ago, when I first started following him and we started connecting, it would have made my life so much easier if I understood this stuff. And there's a lot of common missed deductions that a lot of business owners are missing out on. And this is all stuff that Mark covers inside of that guide. So I'm not even promoting this as like, oh my gosh, I can't wait to make some commissions on this. I'm promoting it just because it really does make a difference for you guys as business owners if you understand this stuff early on. So I would definitely recommend get in on that. And it's such a cheap price too. And it's tax write-off because it's for your business. So you can use that as a deduction as well. So I would just definitely recommend at least check it out. Look at the landing page, all the pretty colors and all that stuff, and make a decision for yourself and your business. So if you guys are hearing topics like this, you're like, okay, I like this guy. He goes way, way deeper on a lot of this stuff inside of there. It's already pre-done material. So very easy to follow as well. All right, so next thing on the list, and we're just going down the list of most common questions that were asked when we did these polls. This is one I love to talk about too, is common missed deductions. Deductions people maybe just don't even think about, especially a lot of times people are starting this and they convert their maybe a spare bedroom or their garage into their little mini warehouse storage area. And a lot of people don't realize how much you can actually deduct from those types of scenarios. So could you go into kind of the common deductions?
Yeah, I mean, and there are deductions that people don't think about, and then there are deductions that people are afraid to take. So like, some that they either don't think about or forget would include something that's really relevant to a lot of resellers, which is mileage. I mean, it's super simple. People are driving round trip to the post office every day. They're going sourcing in other cities. So we're incurring a lot of mileage, and it's something that's really easy to track, especially with some of the apps that are out there today. It's not like the olden days where you had to keep a logbook and write down all the details. It's just, get an app, track your mileage. It's 57.5 cents for 2020. It was 58 cents for 2019. So if you drive 10,000 miles in a year, that's a $5,800 deduction, which that's a big deal on your tax return. So mileage is one. One that people don't think about sometimes would just be their cell phone bill or their internet bill. So we're online almost all day, or if we're part-time, at least several hours a day for listing or building our business, doing whatever it is. So whatever that business portion is that you're using, you can deduct that. So if you estimate that you're using your internet or your phone bill 50% of the time, then deduct 50% of your bill. And that can get you easily $100 off your tax bill on your tax return. And
I cannot
another big one
or deny this, but scrolling Instagram may not exactly count as business use, but if you're following other resellers and looking for their bolos, my question is that product research? Mark may not be able to answer.
I think there's definitely a case,
but it gets, you start to think in terms of like this, right? How much am I exactly using my stuff for business too? This is a super random one. I just thought of it. I don't know why this popped in my head. When I was a massage therapist, I had a home studio at one point, and my CPA at the time advised me to start looking at how much I was actually washing my sheets. Because, obviously I go through a ton of laundry when I'm a massage therapist working on 5 to 6 bodies a day. It was just running the laundry all the time, washing up the sheets in between clients. And so he's like, yeah, you can start to write off a portion of that washer use. How much is it for the business for doing that laundry? And also the detergent that went in there as well. I got to buy detergent for the stuff. So you start to think everything, like throughout the next week, guys, make a list of everything you touch that has to do with your business. So like I said, the cell phone, internet, all that kind of stuff starts to play a role in it.
Yeah, that's good, because most of that stuff you can deduct direct, might have to be deducted a certain way. Like, utilities, they're supposed to be deducted as part of the home office deduction, which is the one I was going to talk about next anyway. So, if you work from home, which a lot of resellers do, or at least start out doing, make sure you have a space. It doesn't even have to be an entire room, but make sure that space is is used regularly and exclusively for the business, because those are the two requirements that you need to use to take deduction. And there are two different methods you can use. You can use the simplified method, which is $5 per square foot up to 300 square feet. So it's a maximum deduction of $1,500. Or you could, which looks at your office square footage as a percentage of the total home. So if it's 20%, it'll multiply that by all of your shared expenses, like your rent, mortgage interest, utilities, property taxes, that kind of thing. In that one, especially for like people or higher cost of living places, that one can easily be several $1,000s worth of a deduction. And it's not, don't worry about that being a red flag. You know, that's just not a thing anymore, if it ever were.
I saw a random but super good question here. Is I have a question for sales tax. If my prep center, quick plug, we did start a prep center over Q4, by the way. So this is who they're referring to. If my prep center is located in Oregon, do I only have to pay taxes to Oregon? I can answer that with, there's actually no sales tax in Oregon. And I'm not even a CPA, so I can't answer that one, though. No sales tax in Oregon, so you will never have to pay sales tax as far as this state goes. But that's a really good question, too. If somebody is using a prep center in another state, are there any tax things that they have to then keep an eye out for?
That's a good question.
It's not a very common question. That's why I want to bring that one up.
Yeah, the question there is like, does having a prep center where your inventory goes give you nexus?
Mm-hmm.
But I think it's not going to be relevant for most states, because in most states now they have marketplace facilitator laws, meaning that in all those states, the platforms are required to take care of sales tax for us. They have to collect it. They have to remit it. So if that did give you sales tax nexus, I think it would only be something you have to worry about in the few states that don't have those laws yet, like Florida. But yeah, there's a lot going on there. That's something I would have to check. I would have to check the specific circumstances to speak about that.
My question would be, since a prep center is just a third party that's prepping and shipping into Amazon's FBA warehouse, so there's never an actual direct sale to a customer through a prep center. It's still ending up and landing inside of an Amazon warehouse. Would that play a role in it not having to deal with collecting?
Yeah, I think so. I think I had an opinion on that at one time, but I mean, it's been a while, so I forgot what it was. But I think I might lean toward what you're saying.
Okay. Yeah. And Jenna, we'll be in contact, so I can collect the if I can figure out the more detailed information on that. I know you, with our center being in Oregon, we have no sales tax, so you don't have to worry about that personally. But I that's a question I'm curious about too. Andre brought up a really good one too, which is credit card interest on product purchase with business credit. Can that be deducted?
Yeah. So, I mean, if it's a business credit card and you're using it for the business, then that's just interest expense deduction. Boom.
Perfect. All right. And I think we covered the basics. If you guys have questions, drop those in the chat, and we're going to hit those as well. I want to make sure I didn't miss any of my big ones here. I know you love this one. Do you need to keep receipts?
Yeah, this is an easy one. So, oh yeah, somebody got mad at me for posting this on Instagram the other day. So I said you don't need to keep receipts, which can be a little bit misleading. But the thing is, like, you do, in theory, you do need some type of substantiation, some type of documentation. And a receipt is usually the most obvious, but it doesn't have to be a receipt. It can be like an invoice or a bank statement or like a canceled check, just, you know, some type of like externally generated evidence that you can take and say, look, this transaction actually exists. So so yeah, keep your receipts. You don't have to keep a physical copy. You can scan it, take a picture, and file it away in a digital folder forever.
There's so many apps now, guys. You should not be keeping physical receipts. You can use ScanSnap or a NeatDesk, which is the physical, thing that will sit on your desk. You can drop that through and scan it. Nice part with those is it will drop into, like, if you use like Evernote or something like that, you can create specific folders where it will automatically drop into there. And then there's tons of apps. Shoebox is one that we use. So you can just, again, take a picture. It takes basically an auto scan of it, categorizes it that way. The flip side to that question too, coming from the Amazon side, is you will need, if you're doing retail arbitrage or not so much online, because you can download your invoice online and stuff. But if you're doing retail arbitrage, keep those receipts. Again, you don't need a physical copy, but the digital form after you scan it in, keep those for a long time, at least a year, because Amazon, if you get hit with a claim of any kind, inauthentic, IP claim, that kind of stuff, you'll need that proof of purchase of the item to back up that claim. But at the end of the day, both Mark and I agree 100%. You don't need to keep the physical receipt. I've actually got a box from last year that we stopped using physical receipts after like July, but I've still got a box from January through July of just receipts I need to go back through and scan because I didn't do it back then. So if you're tired of the boxes, get some type of physical scanner or just download an app.
Yeah, and I'll add to that. The IRS really doesn't care. I mean, you should keep receipts just for good practice, but they don't really care if you don't have receipts that are less than $75. So if you're at a garage sale and you buy some stuff for, $20, $30 and you don't have a receipt, like don't even sweat it.
Because that was always a question too. I think I even asked you that one time, is receipts, because I do a lot of Facebook Marketplace pickups and garage sales, do I actually need a physical logbook to keep around and that kind of stuff too?
Yeah, I mean, you should keep the logbook just so you have a record of what you spent. So that's good. And then just one quick thing, if you have a tax preparer or a CPA, they don't need your receipts. All they need is your numbers. Just want to throw that out there.
Have you had people just bring a box of receipts to you and be like, here you go, figure it out?
Occasionally. Most of the time I stop it before it happens, but sometimes they think that they need them.
Oh man, my other CPA I worked with for a few years, he said that there was a guy who legit just brought like 4 shoe boxes full of receipts to his first appointment, and he just looked at me and went, no. Like, that's not how we're starting this.
Yeah.
I think he made him go home and organize them. That way you can start working from there. We need to do a second, like a follow-up show. We'll call it After Hours, just to hear some of the stories that you have. I can really imagine the CPA world.
Yeah, that'd be funny. CPA talk show. There you go.
Oh man, you guys got some good questions in here. Yeah, keep the questions rolling, guys. We got Mark for another about half hour here. This is a really good one too, is cash back from credit cards. Is that technically considered income? I know there's a couple different ways to do it. Do you have a personal opinion on how they should be managing that? Do they just consider it a bonus at the end of the year? Do they consider it, just part of their monthly income?
Yeah, I think...
is there a technical way the IRS even looks at that, or do they not say much about it?
I think there is. Let me get back to you on that one. I think that's the one. I did another live show and I didn't remember, and I didn't look it up. So let's pass on that one.
Cool. Well, we're going to do a follow-up show for you guys, and we'll get some of these answered. It's funny. It's like the reselling is one of the few areas where cash back on cards becomes an issue of, is it income? Is it not? Because a lot of people that use cash back, it's all personal to them. So it's not really income.
Yeah. So, there are different ways to treat it. I think in my ebook that I have, I actually I go through and I describe 3 different scenarios of how you can treat it. And it's probably just way more information than people need. And then at the end I said, look, just treat it as other income or something.
Yeah.
But I got to double check that.
Next question is a multi-member LLC considered a pass-through entity? If neither member is taking a salary, what portion of the business is taxed since no income is being drawn as a salary?
Yeah, that's a good question. So it's still considered a pass-through because even though you're not physically transferring the money from the business to you personally, the business is still like the profit is still taxed. So the profit from your business return flows through to your individual income tax return to be taxed there, even though you haven't pulled it out of the business. So then in the future, if you ever do take a distribution, those distributions won't be taxed because they were already taxed on your tax return. So I hope that makes sense.
Next one kind of goes back into the two different ways to do the accounting side. Do you need to record what you pay for every single item or just as a whole? Because when I go to Goodwill, I just account for what I spent as a whole. Yeah,
there are different ways to do it. So if you're using the accrual method for inventory, you have to track your costs somehow. And in that case, like if you're buying in volume, I would just use some type of average inventory costing method. And with that type of method, you don't have to track your items individually. You just do it in total. Mm-hmm. And if you go to my website, you can actually see I have a spreadsheet that'll help you do that. It's just an average inventory costing worksheet, and there's a video on there, and I walk you through how it works. It's pretty simple. It's harder to explain, but it's easy when you watch the video and watch me do it.
And speaking of his website, I'll do a quick plug for him because it's so good. But Mark has a free accounting spreadsheet you guys can use too. So that's where you can itemize all your products, as all the columns are broken down for you, nice and clean. All the math equations are inside there, the formulas. I definitely recommend you guys go download that. It's completely free. I'm not getting some type of crazy kickback off of that. Free is my commission on that. Saw another good. Now I was going to bring up too. That's exactly because I asked Mark about this at one point, just with my own business, because oftentimes we buy these liquidation pallets. It's the same thing. Do I need to go through and account for every single? If I get a pallet that like I've got a couple pallets in here right now that there's 1,700 units on it. And I don't want to go through and make 1,700 columns on a spreadsheet that has 1,700 different buy costs, right? So I did that. So Mark's the one that taught me just take an average of total spent divided by how many units are on there. And that's just my average buy cost for each one. Now, when you use that method from the flipping side, some stuff you might break even on, but you'll make a ton more ROI on the others. But at the end of the day, if you spend $1,000 and you make 500 profit, it doesn't matter if you lost money on a few and made money on a few. At the end of the day, you're still making the same amount of profit as a whole. It's just a personal preference on how you guys want to add that up and do your accounting. But I'm a big fan of what Mark said, which is just take the average when you're dealing with that kind of stuff. Especially when you're looking at Trista does the Goodwill bins for clothing a lot. So it's by the pound. So she'll just take total spent divided by how many pieces that she was able to pick up. And she has an average cost that way too. Trey says, I'll pay. I'm so lost on what to do first. Well, luckily we happen to know a CPA. He'll be happy to take your money if you want to hire him. This is what he does full-time as a career for himself. So I definitely recommend. If you guys want to get in touch with him, by the way, I get zero. Let me just put that out there because everyone always asks. I get zero commission kickback, no affiliates, none of that. If I refer someone to use Mark as a CPA. Nor do I want commission on that. I just want you guys to be connected with somebody who knows what they're doing. That's a whole nother topic too. It's actually one of my bullet points I was going to bring up. If you guys are just going around town and just hiring a random CPA who knows nothing about e-commerce, you can probably tell just from listening to Mark for a little bit, he knows specifically e-commerce. He knows the types of deductions you guys need to look out for. He knows all this stuff. So if you guys go to your regular, just Joe Schmo CPA, can they do your taxes for you? Yes. It's probably going to be the most basic way that they can do it, which is how they know how. And you might be paying a lot more than you need to. There's a lot of stuff that you may miss because they don't understand the inventory, the buying and selling portion of it. Mark does buying and selling himself, so he understands this. So I just like to put that out there. I get no commission kickback, but Mark is available for hire if you would like him. Do you want them to go to your website if they want to talk with you and work out a consult and all that stuff, or email, or what's the best way? Yeah,
just go to NotYourDadsCPA.com and you can contact me through there. It's got my email, or you can contact me using the form on there.
Awesome. And after this is done live, so if you're watching the recording, all of his info will be in the link below in the description, so you can check everything out you need with him. And you've got busy season coming up.
I'm a little bit nervous. Not gonna lie.
It's going to be a flood this year because especially in the online presence, you've grown tremendously just on your own Instagram presence over the last year. So you're going to be getting hit up quite a bit. It's a good problem to have. It's almost like, oh my gosh, I have too much inventory to sell and not enough time to list.
Right.
It's a good problem to have.
I have my death pile of clients I haven't followed up with yet.
Oh, it's so funny. This is a good one too. Could you write off gas for whenever you drive store to store? And this kind of ties in. I know that auto repairs fall under that same question too.
Yeah, so you have to choose to deduct either mileage, your business mileage, or your actual expenses, which includes your gas or your repairs, maintenance, stuff like that. So you have to choose one or the other. My
question is, because I know that you're a fan of whatever method you choose to do, for example, your accounting, stick with that because the IRS loves consistency. Do you go just year by year? If all of a sudden I was like, well, I've always written off my mileage, but this year I did a lot of auto repairs, so I want to write off my repairs and my gas. Is that kind of frowned upon to make that switch, or should we just stick with whatever we need to for consistency?
Not necessarily. I mean, there are some rules. Like if in the first year of business you use the actual auto expenses method, you have to stick with that method. But if your first year you use the mileage method, then I believe you can switch back and forth. And it has something to do with the depreciation effect that, like the depreciation piece of the actual expenses method.
Okay.
So
good to know.
It's just, yeah.
See, this is what I'm talking about, guys. Like Mark knows the weird little stuff that normal CPAs
boring stuff.
that normal CPAs probably don't even have to deal with. So this is why, if we personally switched over to Mark over this last year, we've been incredibly happy. All right, I'm scrolling on, make sure I don't miss. If we miss some of your questions, guys, please just repost them because sometimes it's tough to keep up with the chat here. Here's one. Do I have to go back and forth and track each transaction that didn't have sales tax automatically taken out? That is mostly for Etsy, eBay, etc.
Oh, that's a good question. I would, I guess it depends what state you're in. Most people are now in states that have marketplace facilitator laws. And if you're selling to somebody in a state that doesn't have those laws in place, like if you live in Nevada and you make a sale in Florida, they don't have those laws, but you don't have nexus in that state, so you're not responsible for that sales tax. So I think it's safe to say that you probably don't have to worry about it.
And this is why I hired a CPA, so I don't have to track any of this.
Yeah.
And of course that ties into the next question, which is how/where do I file to pay sales tax on my sales? I know this is the most gray area in the whole tax world, is getting into what is Nexus. If you want to cover that for some of the newcomers, what is Nexus? Do I have to worry about sales tax and collecting it from certain states? I know eBay and now Amazon has gotten on board. They've been so much better about collecting that automatically for us.
Yeah, so historically, before all these laws for sales tax, like you're supposed to collect sales tax on the sales that are made in locations where you have nexus or where you have like a physical presence. So if I live in Nevada and I make a sale to someone in Nevada, then I'm supposed to collect sales tax on that sale. But if I'm in Nevada and I sell to somebody in Utah, since I don't have nexus there, I don't have a physical presence, then I don't have to worry about it. So now they have these marketplace facilitator laws in effect that say the platforms have to do that collection for us. And those are in effect in most states. So she's asking if you have to pay sales tax, where do you file to pay sales tax? So let's say you do have to file a sales tax return or pay sales tax, then you're going to need to in theory, you're registered to collect sales tax. You have to be registered with your Department of Revenue or Department of Taxation. It depends what state you're in. Usually you just go online, create an account on there, or log into your account and file your sales tax return. It's like a 1 or 2 page thing with a couple fields. You'll just list your total sales relative to that state and file on there. And the thing is, like, they're not very user friendly, not very intuitive, but once you do it once, it's like, oh, okay, that's not hard. It's not intuitive, but it's not hard. I walked somebody through one this past Saturday, and once we did it once, she's like, oh, okay, I can do that going forward. You just gotta battle through it the first time.
That's just like doing your first FBA shipment, guys.
Yeah, exactly.
Once you do it once, you're like, okay, not bad, I got it, and then it's quicker and quicker and quicker. Please explain why I should never deduct donated inventory as an itemized charitable contribution.
Yeah, so if you have an LLC or sole proprietorship, I guess, or S corp, you can donate your business inventory, but those donations are not deductible to the business. It flows through as part of what's called a separately stated item, and then you can claim that deduction on your personal return as part of your individual charitable donations. But you can only take advantage of that if the sum of your itemized deductions exceed the standard deduction. So, long story short, donating your inventory usually won't benefit you from a tax perspective.
I actually had that happen where we had gotten access and we didn't pay for any of this, which is where it became a little bit of a gray area, but we had gotten a hold of, and I kicked myself because there was probably $10,000 worth of these industrial lights. It was Trista's uncle is an electrician, and his company had this happens all the time. These companies buy so much product for not product, but of course product, supplies. They buy so much supplies for a specific project or a job, and they have tons of leftovers, and it's already deducted, so they have nothing to do with it, so they get rid of it for free. So we got a trailer load of this stuff, and this is before I knew much about really selling on eBay or even local sales or business to business, and so we just donated all of it. And now I kick myself because we could have made at least $5,000 on that if I would have done things the proper way. But I went to my CPA because I'm like, oh, great, this is a $10,000 tax write-off. I just got to donate it all. And he came back and he's like, yeah, no, we can't do that.
Well, I should back up. I should say, like, if you choose to donate it, you can try and take the donation deduction on your personal return. But if you do that, you can't deduct it through cost of goods sold, which is what you would normally do.
Mm-hmm.
So usually if you get rid of inventory or if you donate it, you just treat it as if you sold it for $0 and take the cost of goods sold deduction. But there's no separate like donation deduction.
Yeah. Which of course in my newbie brain, I was all pumped up about. I'm like, oh, it's just a donation. It's worth $10,000. That's why I get it right. No, not exactly. Again, having a CPA can help you figure this stuff out and help guide you through it. Next question that's on my list, I also saw in the chat too, is the whole time. It's all multiple ways of dropping the question, but a lot of it's the same. I only made a few $100s. Do I need to claim that? So this gets into the topic of at which point do I claim? If you don't make at least 20 grand in sales or sell 200 units, Amazon and eBay, they won't typically give you a 1099. So do you need to claim if you don't get a 1099? You want to cover that whole umbrella?
Yeah, I mean, it always depends, but generally, the first dollar of profit that you make is taxable, unfortunately. And it depends on what your income is coming in from other sources. But even if you're below the threshold of $20,000, even if you've only sold, even if you have a few $100s of profit, technically you should still report that on your tax return.
You do have to claim it, guys. I'm sorry.
Sorry. Now you
I
know.
don't want to, but we have to.
No going back.
And, just being completely transparent, like we run this monthly warehouse sale and there's a lot of cash transactions that come in from that, multiples of thousands of dollars sometimes. And I'm always like looking at the wad of cash. I'm like, they would never know if I just pocket this. But of course we run a legitimate business. So we do claim it, as much as we don't want to. But yeah, just claim it, run a legitimate business, guys. It will help you with some headaches. Joe asks, when they say self-employment taxes, is that just your basic taxes you pay on your profit, or do you have to pay into Social Security and all that?
Yeah, that's a good question. So when you have an employer and you're a W-2 employee, they're withholding federal income tax, they're withholding Social Security and Medicare, and let's see. So they're withholding your portion of Social Security and Medicare, and they're also kicking in the employer portion on your behalf. So there's two portions. It's like 7.65% for you, 7.65% for the employer. But then when you're self-employed, you're now both the employer and the employee. So you combine those and it's 15.3%. So the self-employment tax basically covers Social Security and Medicare. So yeah, you have to pay that 15.3% of your profit, and then you have income tax on top of that. So at the end of the day, you could be paying, between 20 and 30% of your profit in total toward taxes.
Mm-hmm. And that income tax is going to vary just state by state. If you guys don't know that already, like everyone's always like, oh my gosh, Oregon, your sales tax, you don't have sales tax. It's like, yes, but our income tax kind of makes up for that. So that's just something to keep in mind. And this is why taxes are not often talked about within, Facebook groups and Instagram and stuff like this, because it really does vary state by state. There's a lot of questions that you can even ask Mark, who specializes in this, and he's going to give you an it depends answer because it varies state by state. He would have to look into your specific state. That actually ties in with one question I saw in here is, when considering to hire Mark, would he be able to know California tax laws, for instance? I'm not sure where Mark is. I came in late.
Yeah, so I'm based in Utah right now. I don't know. We're trying to figure out if we're going to be here in 6 months or not. But
ooh,
yeah,
somewhere in mind.
No, we're trying to figure it out.
Okay.
But I'll let you know. But no, I think the state where I have the most clients is probably California. So yeah, I'm fairly familiar with what's going on out there.
He knows the Cali. This is a good topic too. What if I'm selling just personally owned items, like say clothing not worn anymore, toys outgrown, and we haven't really dove into reselling world? That's a great question too, because a lot of resellers start with what they personally have. So they'll go into their garage, their closet, and start to just sell their personal items. Obviously, there's no buy cost really involved with that. So how do you even begin to work that out?
Yeah, if you are generating a profit, then technically that stuff is still going to be taxable. A lot of times the IRS doesn't really care because a lot of that stuff is being sold at a loss. So you're not going to owe any taxes. But in my opinion, I'm thinking, so if you're generating a loss on all this stuff, it's going to benefit you to report it because that loss can offset any other income that you might be showing from a W-2 or whatever. So I would report it. And so you'll want to report your total sales and your total cost of goods sold. So then the question is, okay, what's the cost of goods sold for this stuff? Like, what's the original, like, what do I use? I don't have the original receipt. I don't remember how much I paid for it. So the rule of thumb is to use the lower of the original cost or the market value. So if you remember the original cost, or if you have it, I would just use that. It's not ideal, but you could estimate it, or you just take the market value. But I don't like taking the market value because it's so subjective. Maybe you could get it at Goodwill for $10, but you see it on Amazon for $100. So then it's like, okay, what's the true market value? So I would just go with like a midpoint maybe in there. So it's not exact. You're going to have to come up with basically an estimate of the cost.
Good to know. How can Will... Hold on. Let me make sure I get this right. I guess the question is, how can you claim it on Amazon if I did not make up to 20,000 this year? And I saw another one from Freddie. It said, do you still get a 1099 if you're under 20,000? That answer is no, you will not get a 1099. It's 20, correct me if I'm wrong, 20,000 or 200 units, correct?
It's and
okay. I haven't looked at that in a while. So and 200 units. So yeah, you won't get a 1099, but you still have to add that in. And you could do it if you're doing your taxes yourself. You just claim whatever income. That's up to you to track that, whether you're using Inventory Lab for Amazon or if you're using a spreadsheet for eBay, whatever the case is there.
And there are one or two states, I think Vermont is one of them, where the state actually requires payment processors to send 1099s if you're above like $600. Like they have a threshold that's way less than the federal threshold.
Okay. It all ties back to just claim it. If you made $10 last year, claim it. Save yourself headache. How do I deduct the sales tax that I paid at Target in places that won't accept reseller license?
Yeah, that's a good question. So the sales tax just becomes a part of the total cost of the inventory. So it just becomes your inventory cost. So then when you sell the inventory, you'll deduct all of it together.
There you go. So you guys aren't actually separating out the sales tax and deducting that part. It's same thing, we have prep center clients now, and it's the same thing that I've told a few of them who are newer. Whatever you paid in total for the product is the cost of the goods. Because I have the same question. I had a couple people be like, well, I paid, $5 for it, and then it was like 87 cents for the sales tax. I'm like, you don't have to separate them out. Just it's, $5.87 is your cost. So always look at that whole number. All right, guys, we got a few minutes left, so drop those questions if you'd like those answered. And also, if you guys are getting some value out of this, hit that like button. I'll drop all of Mark's info in the description below. His Instagram is NotYourDadsCPA. Definitely give him a follow if you are not. What's better for tax purpose, to have free shipping or not to offer free shipping, or is there no difference?
Yeah, that's a good question. I guess it depends how much it drives your sales up.
Because wouldn't it go by, and I'm not a CPA, so I could be dead wrong. It goes by your net profit on the item, correct? So I guess would it really matter if you did free shipping? Let's say you sold an item for $20 free shipping or $15 with $5 shipping. You're still going to make the same net profit, and it's that net profit you're actually taxed on. I guess that's how my mind wraps around it.
Yeah, I mean, that's a tough one because I don't really like the phrase maximize your deductions, because if you want to maximize your deductions, just go spend all your money and then you don't have to pay any taxes.
Then you have no cash.
Yeah, so I prefer the phrase like optimizing your deductions.
Mm-hmm. We'll need help since we're on
Social Security.
Not. Oh, okay. Yeah, we didn't address it here. Yeah, I guess that's a little bit of a different topic, correct?
Yeah, I mean, so Social Security is only taxable if you exceed a certain level of income. So if you have Social Security and then you have reselling income on top of that, your Social Security might be partially taxable, and that depends on your income level, on if you're married, and some stuff like that.
And you guys see where there's a lot of it depends within these questions. That's why it's so beneficial. And again, I don't get commission kickback for referring you to Mark. I really truly believe in having a professional handle this world, because there's so many ways you can mess stuff up yourself. That's not a fear-based comment, by the way. It's just truth. So you rarely will get the it depends from Mark if he's talking one-on-one with you, because he can learn your exact scenario, your state, and get you some more clarity on what you need help with too. A couple good questions in here. I'm 17, just starting out with reselling shoes. Is there a difference between being self-employed and owning an LLC? Which route is best?
You know what's crazy is I'm seeing more messages from people who are 17. I got one from somebody who was 14 the other day.
Hey,
Like,
young hustlers, we love them.
bunch of young hustlers out there.
Man, if we knew this kind of stuff back then, jeez. I didn't even know reselling was a thing until I was 27. Like I flipped a few iPhones on Craigslist when they first came out. Like I didn't realize flipping or like reselling was a thing. And then, I was 27 and looking for a side hustle, and this is what happened. It's crazy.
Yeah. Yeah. So, difference between being self-employed and owning an LLC. So, I mean, they're kind of two separate things. Like you can be self-employed and have an LLC, or you can be self-employed and not get an LLC, and the default will be a sole proprietor. So like if you do nothing, if you just wake up tomorrow and start selling on eBay, you are a sole proprietor by default. You don't need to register anywhere to be considered a sole proprietor. But then, so the question is, well, do I need an LLC? And my opinion is that you don't need one in the beginning necessarily. If you want to have it set up from the beginning and you're in it for the long haul, then there's nothing wrong with setting it up. But it's just good to be aware of what your business is, where you are, because a lot of people, they'll have that opinion in California. They'll go out and make their LLC, but they didn't know it cost them $800. Now all of a sudden they're making, however much per month, but they have to drop $800 a year on this LLC. So it doesn't make sense for everybody. So it just depends. I hate saying that.
I can't believe people's LLCs are that expensive. Like ours is $150. It's crazy.
Yeah, I mean, I just talked to somebody from Colorado. I think it was $50, or they were really cheap.
Wow. All right, guys, last couple questions. My daughter is looking at reselling and a college student, non-working otherwise. She is currently on our taxes as a dependent. How will we or she be affected at tax time? That's a very specific scenario.
She's looking at reselling. So sounds like she's not reselling yet, but if she were reselling, she would have to file her own tax return. You could still claim her as a dependent. I mean, you could if you meet certain requirements, like if you provide more than half her support and some other stuff like that. But that is an option.
I see a couple of shout outs. Flip your dollar for the $5 super chat who said, for the great info, split that $3 with Mark. So Mark, I'll make sure you get your $3 on that.
Yes. I'm going to hold you to that.
That's hilarious. That's funny. That's a first for a guest getting a super chat on here. That's hilarious. I will gladly hand that over. And then a second super chat for $2 from BBLL. Sorry, just joining. Does Mark accept clients from Florida? So that's a good question. Do you only work with local people? A lot of people don't realize you can work with a CPA who's in another state. Are you open for clients?
Yeah, so far my clients are all over the country. Handful of them in Florida. So yeah, definitely. Oregon.
All right, let me grab a couple last minute questions. What's up, Anthony? Resell Ant, based out of Vegas, said very good info. I've been taking notes. Thank you both. Do sole proprietorship have to pay quarterly? That's a good topic too, is when do you have to start paying quarterly taxes versus just once a year?
Quarterly estimated taxes. Yep. So again, when you are an employee, like a W-2 employee, your employer is withholding taxes on your behalf and sending them to the government throughout the year. So when you become self-employed, the government still wants their taxes throughout the year. So the main rule is that if you owe over $1,000, or if you are going to owe over $1,000 in tax at the end of the year, you're supposed to you're supposed to break that up and send it in quarterly, or send in taxes on that quarterly to the government. And there's a couple other rules around it, but that's the main one. Otherwise, you might incur late penalties and interest.
Good info on that one. All right, crew, we are at our time, but it's not over yet. Mark can break down his Reseller Tax Academy. He just relaunched again, put some fresh content in there. And it's at like a stupid low price, by the way. He could charge 3 times this much. I saw your little Instagram video today. You like did the math on it. It was pretty funny to watch. So I would definitely recommend you guys check this out. It is in the chat right now. It is also inside the description. Mark can break down the price point that it's currently at, how long it stays at that price until it goes full price, what's included. So for the people who are just hopping on, who have no idea what this academy is, if you want to give them a breakdown what it is.
Yeah, just real quick. I mean, I just broke down, like, I get the same questions of what resellers are dealing with from taxes and accounting. And I put it all in this course, I talk all about deductions. I talk all about inventory, all about tax basics for resellers, accounting basics. And I just go through everything, try and tie it all together and really show you how taxes impact your business and your overall goals. I mean, I didn't even realize how much taxes really are a pain point for people. Like, I talk to people and they tell me that they're having nervous breakdowns about letters that they got from the IRS and stuff like that. And that kind of stress and anxiety really takes a toll on your business. So if you can invest just a little bit in your education, a lot of that anxiety is going to go away, and you're going to be able to redirect that energy into your business. I mean, like you said, I opened up the first version of it last year, and I've gotten a lot of good feedback. Like, it's really helping people. The price right now for the next 48 hours is less than $200. It's going to bump up slightly after that for about a week, and then it's going to go up to full price. But I think we'll have a discount code here for you. But if you have any questions about it, just shoot me an email, shoot me a message on Instagram, and I'm happy to help.
Awesome. Well, we appreciate all the info you gave here on the channel. And if you guys are watching this live, or when is the date that the first discount is done? Because today is the 14th of January.
So 16th it will end.
All right. So if you are watching this after January 16, 2020, it will probably be full price, but there is a discount code here for the audience just on this channel. You can check it out in the description below, and that will get you a little discount on top of that. Like I said earlier, it's not about, the commission kickback and all that stuff. That's part of our business model. It's great, but it's more so just getting you guys educated so you're not slapped with some of these extra taxes you don't have to pay. You can actually work with a professional, get educated. That way, again, like, I've experienced the anxiety and mental breakdowns that come from this stuff. That's part of the reason why Q4 was kind of like a mental mess for me. It's not fun. So get educated and get your business straight and run this thing like a business. It will make a big difference for you. So Mark, thank you for your time. I know it's getting to be on the late side over there in Utah, so we appreciate you being on here. He's a night owl. What am I talking about? He's
no, not really. Totally lame.
The night is young.
Right.
Awesome. Well, we'll definitely have Mark back on the show. There's always questions. There's always updates. It's always evolving and changing in the tax world, and Mark is always up to date on this stuff. So we'll definitely have him back on the show. So thank you guys so much for tuning in. Hit that like button if you guys enjoy the content. We are back on regular live schedule every Tuesday throughout 2020, 5 p.m. Pacific time. We'll be right here, guest speakers, bringing my own topics to the table, that kind of stuff. So Mark, thank you, my friend. We'll be in touch. You guys hop on, grab that academy. We'll see you later.